Hello, my name is Justin White, and I'm one of the licensed agents here at High Tide Real Estate Group. We're located in the beautiful Comox Valley on Vancouver Island, BC. We hope that you've been enjoying the website, you've been going through, taking advantage of saving all your searches for the different areas of Comox Valley and Campbell River, as well as clicking on the hearts on all your favorite listings so that they'll all be stored in one place. Now, before we actually get to the point of buying a home, there's one area that we want to touch upon today, which is financing. In the last 2 years, financing has changed just as much as the housing market. So we wanted to take an opportunity right now to walk through what are the 5 steps in order for you to make a knowledgeable decision in order to get your financing in place. Regardless if you're a first-time home buyer or a savvy investor, and this is your second or third rental home purchase. You see, when I was 20 years old, I bought my first home, and I'll never forget it being in the office of the bank at the time and just going through and the bank official saying, sign here, sign here, sign here, sign here, sign here. I honestly didn't even know what I was signing. And at the time, I remember feeling a little lost and just hoping that they were out for my best interest. And what I realized and found that going along, there are some easy ways that you can save yourself a lot of money in the long run, because there's fancy terms like fixed rate or variable rate or, acquisition. And what do they all mean? And that's what happens when you're at the bank. So we want to take this time. We're going to walk through what are the 5 steps of getting financed. So step number 1 is one of the biggest questions that we get asked as real estate agents. What do I need for a down payment, and when do I need a down payment? So the very first thing is down payments are a temporary hold on some money after the contract of purchase and sale has been accepted. What that means is that you're going to be putting in an offer on a home, which is actually a legally binding contract. You'll be working with your licensed agent to draft that up, and it'll be presented from your agent to the seller's agent. And on that, there'll be a deposit amount. Typically, that amount is between 10 to 15%. Now, if the seller decides to accept your offer, then it will be a legally binding contract. And at that point, you will have 48 hours to produce that down payment, which will be held in trust by the agent's brokerage. Now, some people say, well, do I need to have 5 to 10%? No. If you're watching this and you're in British Columbia or Canada, there's actually a process called CMHC. And what that stands for is the Canadian Mortgage and Housing Corporation. And if you have anything less than 10% as a deposit, they will actually insure the loan, meaning the total amount of the mortgage, to the lender. So if you happen to default, they'll be actually able to go to CMHC and they'll be actually able to retrieve those funds. So typically the rate for lending, there's a fee associated with this type of insurance. And it's anywhere from 0.6% all the way up to 4% of the total value of the mortgage. And how that gets diverted is depending on how much of a deposit you put down. The lower amount of the deposit, which would be a minimum of 5%, you'll be paying a higher premium for the CMHC insurance on that. And again, it protects the lender and it protects yourself. So how does that fee get paid? Typically, that fee gets put back onto the mortgage lender. We'll put it back onto the mortgage. So you'll see a very, very nominal fee for that CMHC fee on top of your mortgage because it'll be distributed through the full term payment. So every month you'll pay a little bit towards it. So that's number 1. Number 2 is how do you build credit? Because some people may not have credit score out there. The first thing that we would recommend is use a reputable credit company like either Equifax or Credit Karma. Go online and just check on what is your credit score. Banks like to see 740 and plus. Once you get to 780 on your credit score, usually the banks will be bending over backwards to give you money. Now, if you're not there yet, you want to take a look at what do I have that is a high interest payment? Things like credit cards, things like high interest personal loans. And what we recommend is paying all of those off before you start the house buying process. That'll also build up your credit score. The fourth thing is to get pre-qualified, meaning, what's your budget? how much are you going to be able to get for a mortgage? So the quicker that you can get that submitted off and get that pre-approval, the better off you are while making an offer. The last thing you want to do is start looking at homes not being pre-qualified and then finding a home that you love and having to try and scramble around between mortgage brokers or banks to get that pre-qualification. And when you're going for that pre-qualification, some things that you want to have ready is they'll normally ask for 1 to 2 years of your notice of assessment, meaning what is your personal tax return look like? You can get those from your CRA website to log on to, but have those ready. If you're self-employed, you'll need more information about your income. The next is proof of income, things like pay stubs. Things like you've got your T4. So the banks and mortgage brokers really want to see that you actually have that income and that you've had it for 2 to 4 years. And next, proof of investments, assets, RRSPs, GICs, other property, things that really show that you have equity, and they want detailed statements all up to date for that. Finally, your fifth step is finding the agent that you like to work with. Finding an agent that can hear you, that can understand what are your wants, what are your needs, and go and see listings, see everything that's available within your price range. Because as you go to see more homes, even though they may not be the home you're looking for, what's going to happen is you're going to start to dial in the searches. You're going to start to really understand what are the things that you need for you and your family, and what are maybe some of those things you want. So you want to see as many options that are out there on the market. Normally, this process will take 45 to 120 days, but never buy a home because you feel like it's the one, if it's one of the very first ones you looked at. Take your time. The market is always changing. There's always more inventory on there. And if you see one that you really like, mark down what are all the things that you loved about it and carry that list when you go to viewing the next homes. So we would be happy to be on this journey with you, walking you through at High Tide Real Estate Group. If you have any questions, please feel free to reach out. Because at High Tide Real Estate Group, we believe a high tide floats all boats.